And so what are some of the pitfalls that maybe some businesses might run into when they're looking at distribution?
Yeah, they're constantly underestimating, believe it or not, the ease of it or the importance of it. It's execution. Execution is so very important, but if it's not on shelf, it's not for sale.
Yeah.
Nobody cares about Marion Roberts juice if it's not on shelf.
Right.
So distribution trusts us, and so does retail, and our team is incredible. Live from the Calamax Studios at Loft 100, Big Biz Show is on the air. Great to have you along today. 76 million broadcast homes, including Biz Television Network and, of course, Bloomberg Financiero. Big Biz Show is on the air. Mike Costa, Sully, our executive producer, Greg Todoroff, and the DTT. Is that a little earth wind I hear? You know, you don't call it earth, wind, and fire. You call it earth wind, especially if you're from California. What do you call it if you're from New York?
Earth wind and hurricane?
No, Trey said it was earth wind, if I'm not mistaken. Didn't you?
Really?
Were you the one who said that to me? Earth wind. Earth. Thank you to our good friends at Calamax, of course, also sponsor of the Market Update every day at this time with Howie Font. Howie live with us from New York. Take it away, Howard. How are you? Mike Costa was talking about you having the greatest hair in the history of hair. Of course,
really nice hair.
He's also 17 years old.
Well, it's still, I mean, you know, he's super smart. He's fiscally
You realize
awesome.
he's 29 years old.
Right.
He's already run for city council at some point in his life.
And he's got a stupid awesome head of hair.
Sure. It's actually a Zoom filter. I'm bald with a beard. The technology's amazing.
Bald with a beard. Hey, we were talking yesterday about consumer spending. We were talking about the inflationary picture based upon what's going on with gas prices, what's going on with the jobs report, so on and so forth. What do you got for us today?
Yeah, so I wanted to focus a little bit on how you can use these rates, since as we've been talking about, they're going to stay higher for longer. How this can be of advantage to people. And if you have savings, it's really important that we do cash management right. And that hasn't really been a thing we've needed to discuss for the last decade since the Great Correction.
Yeah.
Because rates have been so low. But now that we are going to endure 5.5% rates, let's make sure we're getting that on our money. If you keep your cash in a savings account, I think you're going to make what? 0.01%.
Right. I mean, there's a couple online where you can make close to 1%. Oof. But it's not. But if inflation is 7, 6, 5, 4, even 3, and you're making 1, I believe there's a reverse to the rule of 72s. Rule of 72s will tell you how long it'll take based upon interest rates to double your money. I think there's a reverse calculation to how much you lose all your money if you just keep it in a savings account. So, Howie, this is important to talk about here. Keeping it in a passbook account means you will eventually have no money if you don't put some money at risk. Correct?
That's right. And the thing about interest rates being this high is the risk-free rate is much higher than you'd ever expect it to be. So there are a couple levels to this. You don't want to do a savings account, you're going to get nothing for that. The next best thing, I believe, a high interest rate savings account, you'll get a couple percent. Next is a money market fund.
But that couple percent, again, is still not keeping up with inflation, correct? This is just hiding in a corner, waiting for the inevitable, correct?
Yeah. That's right. But if you want to keep money liquid and have it available, you might as well keep it at 5.5. Let's see, 5.2, 5.5, like you can with a lot of money market funds now. And those money market funds invest in T-bills and other government debt, so it is fairly liquid.
Sure.
You wait a day and you get your money back. So people should be doing that. Next, I see a lot of people doing CDs. I don't understand this. I don't know why people want to lock up their money for any time. If you're going to do a CD, make sure that you can't get the rate on that CD anywhere else.
Like, keep it like a certificate of deposit. I mean, you are in jail with that money, and there's also not only you pay a penalty to the bank, you also pay a penalty to the IRS in some cases if it's in the form of an IRA or any sort of retirement plan. You got to be really careful about how you structure those, correct?
That's absolutely right. And if you were going to go down that road, then I would prefer you go down my next item on the list, T-bills. If you're going to do something for 3 months or 6 months, let's do it in government debt. You have the tax advantage of a T-bill, and you don't pay state or local taxes on that, which I hear is a problem for some people.
Yeah, sure.
And they make it simple to buy.
Yeah, exactly right.
California and New York, where we are, it's earth, wind, fire, and taxes.
Yes, in depth. Hey, Howie, what about putting your money at risk in the form of exchange-traded funds? Now, exchange-traded funds is like a mutual fund, but it trades like a stock. In other words, a GLD would be one example. That's a gold exchange-traded funds. It's a basket of gold stocks, or QQQ. It's the NASDAQ 100, and it's, in other words, a basket of stocks in one individual stock. Is that still too risky for some folks that have this sort of savings account mentality?
I consider a large ETF, like you're saying, for gold, that's great. If you want to go SPY for the S&P 500, QQQ, all that, that is the first stop on investing to me. That is dollar cost averaging. You go on Robinhood, buy a fractional share. You go on E-Trade, buy whole shares, and you put a little bit away each month. That, to me, is at-risk money, but it's the safest at-risk money.
I'm going to stop you there so you can describe, and I'll let you do the description of dollar cost averaging, because it really is, it's a monthly practice of investing. Talk about dollar cost averaging for the average Joe.
Of course. Well, basically, the principle is time in the market versus timing the market. You, as an average Joe, are not going to know, do I buy it X price or Y price? We're going to put in a little bit every month, just like we would put away some savings. We're going to put away some allocation for investment. You stick to it, be disciplined.
Whether it be $100 a month, $50 a month, $1,000 a month, you're every month buying that stock, and you're averaging up and down, but you're being disciplined about it, correct?
You're getting a variety of prices, but on average, the market for the last 60 years has gone up 7%. In the last 13 years, it's gone up about 13%. So in the long term, if you don't need the money within 3 to 5 years, that's the best place for it, I would say. General broad rule of advice.
So long story short, he's telling you, look, we're going to take advantage of what's going on here with these interest rates. At the same time, don't hide under a rock and get a passbook account. And that's why Howie Font has not only the best hair in the land, he's the smartest financial
So cool.
in the land. Here we go. Yep. Thank you, Howie. The Calamex Market Update with Howie Font every day at this time.
So take it out of my mattress and go do something with it.
Yeah. Get out from under the rock.
Leave it in the piggy bank, though.
So you're saying I should take my change purse out of my pocket?
Change purse.
Big Bizbo. From the Calamex Studios at Loft 100, much more to come. Stand by.